Hey traders, this is Jeff from ZenTrader.ca. Let's talk timing signal and the outlook for the markets for the end of this week and heading into next week. Earlier this week on the 7th, my market timing signal switched to bullish mode, and it actually issued a trade alert for the NASDAQ on the 8th. You can see here I sent an alert out to those who are on my free newsletter, and you can just sign up for that on the main ZenTrader.ca page if you're not already on there. You can be alerted to future trade alerts on the NASDAQ, and then I also have my Trade with Zen service, which on top of picking strong stocks which are likely to outperform, I also issue trade alerts for the the Dow and the Toronto Stock Exchange, all of which are bullish right now, and one of those markets actually triggered a buy signal as well this week, and that was sent out to subscribers. So essentially, I believe the market's going to outperform to the upside. I believe it's going to go up. The strength is just too strong off of the macro news last week. I really believe that if this needed to fail immediately if this bearish timing signal was going to hold. The fact that we've held and this gap has actually more or less held, it's been support, because you could see that we really haven't given anything back. And I know a lot of people are saying that we're overbought and we're likely going to fall, but I don't really know if that's the case. There are some other charts that I don't really share that just suggest that we're going to go higher. A lot of people point to the VIX as a measure of complacency and how it's really at an extremely low rating. And I've got a chart here I'm going to show you that really shows that the VIX is not a reliable indicator when trying to time complacency. So this is simply a 6-year chart, and it really shows that around this 13 to 14 level, if you go back and you look, some of these have been tops in the markets. But I'm going to show you the same chart and add about 7-8 more years to it, and you can see how there are periods in time where we just stay below this level for years. And I'm of the belief that the VIX is such an unreliable indicator when it comes to trying to pick tops in the markets. Now, when the markets are really selling off hardcore, the VIX can be useful in picking picking a bottom in the market. But even then, it's tough, and that's part of one of the reasons why sometimes I like to just use a chart where it shows the VIX removed and it just shows the 10-day exponential moving average, because that really smooths things out a little bit. I don't have that chart right now ready, but I just wanted to point out that the VIX at the readings where it's at now, while it's it's a concern if you're bullish, but at the same time we can go a lot lower in the VIX. So two other charts which are kind of market internal charts which are suggesting higher prices is the NASDAQ high-low. The actual NASDAQ high-low indicator is this grayed out thing, and you can see that we're getting back into this 80 to 90 range. It's a good range, meaning you're going to see lots of breakouts start to happen. About the only thing that's going to derail this rally, in my opinion, is if earnings are received poorly by traders. And it's not even like I can say if earnings come in low, because we have no idea how investors are going to interpret that. It's really what is the reaction, and so that's a very real possibility that investors could just not like the earnings and sell off. But as of right now, things are shaping up. This is the NYSE high-low, and you can see it is between the 80 and 95 level, and it's just an indicator that tells me that stocks by and large are going up and hitting new highs, and it's a good measure. So with my timing signal bullish, I really think that that's just the way to trade now.